And a very good morning to you, and welcome to the TriggerCharts pre-market rundown for Friday, August 12th, 2022. Hey, I'm Andrew Horowitz, and we have a lot to talk about today. Lots going on, obviously, in the markets, as well as on the economic front, individual stocks doing some really interesting things. And hopefully you're doing a good amount of trading with regard to some very specific moves that we're seeing, because the returns recently off of bases, particularly those bases that have been supported by the altimeter, the algorithm that we utilize with a market profile as the backdrop, have been really amazing. Seriously. I mean, amazing. Everybody's sitting there crying in their milk about, oh my God, we're going into recession. Oh, this is terrible. Things are just awful. Meanwhile, whether this is a bear market bounce, it's a fake out, I don't care what you want to call it, man, has it been spectacular over the last several weeks. And one of the reasons is because of what is going on with yields and the expectation for inflation, and the idea that now everybody's getting in their mindset and in their vocabulary, their regular discussion, maybe we have peak inflation. Something we've seen, right? Everybody was freaking out, putting their hair on fire, running around. And now all of a sudden, everybody's very calm, thinking, maybe it's over. I mean, Joe Biden said, right? What did he say? Zero inflation. Well, he was right and wrong. It was no inflation from the month before on the headline print. But the fact of the matter is, we're still at an 8.5%. Hey, before we get any further, let's talk about a couple things. Some things are really important. Thank you for joining me. As always, we're going to have this as recorded, be over on the YouTube channel and on TriggerCharts.com. But it's important to understand, as a disclaimer, that investing is a risky proposition. Past performance is not a guarantee of future results, and a loss of original capital may and can and will occur. Please consider everything that we talk about today for educational purposes only. Now, the second part of what I want to talk about is right here. So I've been talking to you about what's going on. The TradeStation in particular has been working on this what became finally the reality, which we were working on, but it turned out they're shutting down their entire trading app store, as you are probably aware of. I sent out an email personally last week to the subscribers and told them, hey, look, don't panic. Two things you don't want to do. Number one, do not uninstall. You uninstall, you're not getting this back right now of any of the indicators that you have over on TradeStation. The other thing I told you, which was really cool, is that we have a new distribution package team that we're working with to put this out, not only on TradeStation, by the way, but several other platforms. And more importantly, this is really the good thing, it's going to be an expanded package with more indicators based on the same algorithms, market profile that we use. So right now we have a few that are the core, right? You're looking at things like altimeter, which is an algorithm that's based off of market profile. Then you have what is a market profile, essentially, which is radar. Well, then you have autopilot, etc. Now, what we're doing is we're taking some of the things that we've been working on for years in the background, as well as some things that are out there available. We're going to put out there available to you, probably about 6 different indicators. So we're going to go from about 4 to 6 at least, maybe 7. Working on one little piece of that, maybe 7 indicators, and it's going to be at or below the current price that you're paying now for the Commander series. So really cool stuff. And it's going to be available on multiple platforms. So let's say that you work on TradeStation, you like TradeStation. Well, that's great. That's fine. But let's say you're on another platform that we support. Well, you could utilize it for that. Now, you can obviously, each one of those has its own set of indicators that you'll install. But the point is that you can now have choices, and people, it opens the whole world. If you're thinking about, well, I want to try out, for example, utilizing ABC platform or XYZ platform, it's going to be available. It should be available, not every platform, but we'll have availability for a lot of these. Really cool stuff happening. So the other thing is, I want to make sure we're clear on this. There'll be changes to some of the names because how we're packaging it, just to keep it standardized across all trading platforms. But what's good to know is, it's really, really important to know, and I want to stress this, and then we'll move on. Everything is based on the exact same algorithms, calculations that you are used to and that works so well. So keep that in mind. So anybody that is a subscriber on this call this morning, or that is looking to subscribe, please keep a very close watch to your email. We have several emails that will be going out shortly to tell you what's going on. Okay, good. We all good with that? Any questions, by the way, on that? If you have any questions, do me a favor. You should be able to utilize the chat. I fixed that up. Put it in here. I'm going to put the word here in there. Any questions you have on any of the things that we're doing as a company and the expansion of the packages and the distribution, let me know. And for those of you that don't know, it will be an easy install. So there you go for that. Secondly, if you have any stocks that you want me to talk about, or indices, or any kind of symbol that can go into TradeStation, put it in the chat and I will go through that as well. So let's talk about the themes. FOMO, fear of missing out. So we went from last year from FOMO to phobia, which is fear of being in, back to FOMO all over again. Reaching for the moon, right? To the moon is the big discussion that we see, of course, with traders, particularly in the crypto space, but it seems that there's a lot of things they're trying to do as well in the stock space. We saw last week a couple of names that I brought to the fore that were untradeable, but yet crazy to the upside. This AMTD Digital that was up from, I don't know, $10 to 2,500 in a matter of days, all the way back to 200, which is still higher than the original. But I mean, we're talking about an 80% or 85% drop from the high of where it's sitting right now. No inflation here, of course. That's kind of a funny statement. We know we have inflation. We know the fact is the prices are higher. Even though we saw the PPI dip last month, that was out yesterday, a negative 0.5 on the PPI. Good signs, things are good, but a lot of that has to do with oil. Now, I want to share with you something, and there's a lot of question of why are the markets doing what they're doing. A great example of what's happening is the totality of the chart on the right. And I've been leaving this up there for a while because I think it's really important to recognize a few things. And let's go through this for a second, because I think it's something that we really should talk about. So we saw this peak of interest rates. This is the 10-year rate, the rate on the 10-year treasury right now. Okay. So utilize this number when you put it on your chart, 3.34.0. No, it's not 34. It's 3.4. Okay. So when you do that, we look at this and we say, oh, well, we peaked out at the 3.5 level right up here. You know what? What does that coincide with? Well, right about here, right? This level date here is right where stocks pretty much stopped moving down. This really big ramp that we saw here was very detrimental to stocks. And all of a sudden we saw this turn. This turn was magical for stocks. The move down on interest rates. It allows for further leverage at cheaper prices. It allows for companies to go out and buy bonds and then do things like stock buybacks. Because when it was starting to head up here, everybody was freaking out like, oh my gosh, valuations on technology, on biotechs really got hurt at the top here. Now, I still think we probably are going a bit higher than this on the 10-year eventually. But right now, the idea is, well, we reach peak inflation. Everybody starts talking the story, and we get down to 2.5%, a full 1% off of where we were at the high. No wonder stocks rallied so dramatically. Now, one of the things that you want to look at is right here yesterday. Remember what happened yesterday? Stocks were up. Things were off to the races. The markets were great. We saw this move from the day before that we saw interest rates move lower. And then PPI came out and it stayed down. And then during the day, it just started moving up higher, higher, higher. Now, what happened to the stock market yesterday? Well, what happened in the stock market was this. And then what happened as rates started coming in? The NASDAQ in particular went like that. Ended up about 0.5% lower yesterday. Why? Interest rates moving up. Where are we today? We're at the bottom of the channel right now. 2.851 is the current rate. And we're seeing that indices are doing pretty well. Now, will they hold? Will interest rates hold? I mean, we have a lot of Fed speakers coming out saying, hey, you know what? Rates are going up. They're not coming down. Rates are going up. The fact of the matter is they're going to go up and they're going to continue going up. And when they go up further, we're probably going to continue this for a while. We want to slow down the economy. This chart that you're looking at, this chart right here, keep this $TNX.X. See that? There's your symbol right there. $TNX.X. Put that on a daily, put that on a 30-minute chart and watch that. I think it's very important to keep that on your screen, because this is what's really leading things right now dramatically. So, keep that on the list. Now, what else? What else do we have? Well, earnings, we talked about this last week, still better than feared. Things are better for the most part than it thought would be. And companies are coming out like Apple overnight with the commentary, hey, you know what? We're going to continue to build phones at the same pace as we did last year. So make sure that suppliers, you're aware of this. So meanwhile, we saw some very big warnings from Micron, NVIDIA, other companies in the tech space, companies like Microsoft slowing down, laying off, and really halting any new hires. And also, not yesterday, day before, coming out with, you really stopped. We have managers. You really need to slow down on the spend, the expenses, get that under control. So, on one hand, we have better than feared. On the other hand, we have a reality check that things are slowing down. And on the other hand, we have some other stocks that are really putting out warnings that are pretty dire. So maybe there's a light at the end of the tunnel. The question is, and we always ask this, what kind of light is it? Is it, just fame and glory and wonderful things overall for the economy? Or are we going to head to a hard landing where that light ends up being a locomotive coming right at me and going to barreling right over me? The CPI and the PPI, one particular month does not make a trend. We know that, right? But the fact is we still have sticky prices. In other words, if the price of a loaf of bread went from $1 to $2, and now we have no inflation, that doesn't mean that $2 loaf of bread is going down in price. It's still $2 loaf of bread. So it's still 100% of where it was. So prices are still sticky. Labor markets are still tight. This lends us to believe that there's still going to be a significant amount of tightening going on with the Fed, and then we have yields going up. Okay, what else? Well, we did see something interesting. We saw meme stocks moving, right? First, we saw some of these outsiders, these crazy ones, very high short interest, low volume, move up. Well, all of a sudden, the GameStops, the AMC, the Build-A-Bears, the BBBY, the Bed Bath & Beyond, all of these started moving again. High short interest names blasting off. Pretty interesting. And what does that mean? On one hand, it means that there's a lot of excess players in there that are, I think, playing around, trying to get cute, and obviously having some interim luck with it right now. But you have to wonder, is that really what a solid rally is made from? On the other hand, I think it's important to recognize that rallies usually start with a short interest cover. So is this a short interest cover? Is this shorts saying, hey, you know what? We think we've gotten all we can out of this, and we're going to simply go the other way. And we're going to get rid of our shorts, and that's going to start the next leg of the rally. I think, frankly, at 42.33, valuation-wise, you got to wonder about that. But I don't think it's going to stop anybody. There is a bid in the market right now. Maybe they saw there's a stimulus deal that's on the table. Everybody's excited about that. Maybe interest rates are down. They think the Fed's going to slow down. I don't know. There was this whole capitulation discussion, about, we have to have capitulation before we get a rally. You see a 20% rally off of the depths of the NASDAQ. That is a pretty good level of return. We're talking about, again, everybody was talking about 3,200 on the S&P 500. The future's at 42.34 right now. That is a very big differential from where we were, from the expectation that we were going to drop from 3,700 and change to 3,200. And that was going to be another 20% downside from there. What happened to that? I have no idea. Fact of the matter is that there's lessons to be learned here. The lessons are, we watch the markets. We take a look at charts. We spend our time studying them. We spend less time listening to what's going on with the talking heads on TV. Turn the volume off. Just look for the information that's pouring in, right? And then the lessons we have on some of the things that we saw with all of this meme stock and small cap, short interest, high short interest moving, right? AMTD and HKD. Let's look at HKD as an example. Look at that. Look at this. This is a 60-minute chart on the left here. This is a daily chart on the right, right? So, you got this call to pick this up somewhere around 57, never came off, went up to 2,500. Because it's such a crazy fast mover, 1250 was the out. He came down 50%. I don't know. If you got the call and you followed along at 57 and got out 1250, I think we're in good shape, right? Right now, we got a base that's forming here. Is this really something that you can actually do anything with? I don't know. AMTD is its sister company right here. What you have here is a very similar kind of chart from $2 to 12, currently trading what at $2.33. Where's it going? I don't know. The lesson, moreover, is not about is this something, but hey, don't chase these crazy, insane moves that are crazy, insane moves. We've seen the move that we saw. Look at the daily on this. The daily move on ARC. Back this one here. This move from 90 to 150. This was only in the end of 2020, though, and then this all the way back down. Now, ARC, we know this Kathy Wood, it's one from 37. Where is it now? 50. That's a pretty good return. I think it's a 35% return recently off of the bottoms here into a little bit of a breakout area, reversed lower yesterday, up 1.76 or 88 cents today. Again, Friday, coming into a Friday, trying to, I think, make good on the rotation down from yesterday. I think there's a lot of players that think, hey, you know what? These small stocks have still some great opportunity on here. In a very overbought situation that's resolving down a little bit here. Still, again, over the top right now. And right now trading at 422. What is that? About here, 422.37. Yeah. 417 was a breakout, 418 somewhere in just on that chart. Okay, USD, that's another important issue. We saw the USD, the US dollar, start to really drop down dramatically recently with the idea there's fewer rate hikes. That has been the same, I would say the same trade, the same issue that comes forth with the rates, right? Very good for emerging markets, commodities, gold. Next week, we got initial claims. This week we saw initial claims, and they were rising. We saw that initial claims were higher than expected, and the CPI was falling. PPI again down. Crude inventories were building, so we have oil coming down a bit. We have the dollar coming down. We have rates, somewhere moving up a little bit, but nothing crazy right now. Down again today, by the way. You see that correlation between lower rates and better NASDAQ. We have overall the idea that, hey, you know what, maybe we're at the end of the worst here, and it's green light to start buying again. I will tell you that, if in fact inflation has peaked right now, I would still think that the Fed is going to want to keep on keeping on for a little while. Now, next week, big week in terms of a few items when it comes to economics. We have retail sales that are pretty big, housing numbers, new housing, existing homes, inventories, business inventories that come out. That's important to see what's going on there. Industrial production and capacity utilization are also coming out. Those will be interesting to watch next week as well. I think that is going to give us a really good glimpse into what's happening with the overall manufacturing and productivity side of the equation. There's been a lot of talk, particularly from chips and tech and a few other areas, that things are really not as good as they seem. So retail has had some problems. We have a bunch of retail coming out next week as well. We have we got Walmart, Target, Ross Stores, TJ Maxx, TJX, we'll call it. So a lot of things happening next week. Stocks to watch. I mean, some of the names like we talked about earlier, right? All these crazy moves we'll talk about here. Again, give me your stocks. I'll put in stocks. Put your symbols into the little chat box there. All right. Let's take a look at a few of these. So RBLX, Roblox. So missed numbers. And you'll see that this is the left-hand side is our 60-minute. Missed numbers after the close came out, dropped down, gapped lower down to 42. Now, there was some question as to, look at this big run-up that it's had lately. You can see this on the right-hand side here, right? So this big run-up right here. And is that sustainable? Well, we get this earnings number, and you see this big dip on the 60 and the daily right there. And then it turns around. Well, we later find out that Kathy Wood was buying stock. Anything that drops, she seems to want to buy right now, and no matter the good or the bad or the ugly of it. So this did rotate down from about 53 down to about 49 yesterday, currently trading about 50 and change. Did get above its level just for a moment, but that's a pretty hard level. You know, that 49.50 number right there, approximately about $50 per share, is important. Not much above there. You know, you could possibly see a 53, but there is some consolidation in this area, right? We always look left, right? We always learn this, look left, and then we see this consolidation area. That consolidation area, let me do it a bit better here, is like right here, right where it is. A lot of consolidation there. A lot of difficulty getting through that. If it does, that's good. Our momentum indicator is showing us, you know, pretty good numbers there, slowing down a little bit right here, right? The momentum's starting to slow down a little bit. But what you have in this is a pretty good looking chart channel. You want to look at that way, some green. Right now, we are in between. We're consolidating here. So right now, it did try to break out yesterday, false breakout. By the end of the day, always look for the bar close. You want to see the bar close, and that will be a yellow for your signal of a change in direction and for a bias long or short. So important to recognize that. We also got, okay, so ARKK, I mentioned that earlier. Up to a point where that's very interesting right here. Not much above it, but again, this is an ETF, so you have to understand what's behind it and what's going on there. Bottom line, though, is there was some decent movement above a very large consolidation point. Here's a consolidation right there. If I can just grab the corner, there we go. That's your consolidation. Did finally resolve to the upside temporarily right now. Could continue on if the stocks move much higher. Still down 60 or 55% for the year, I think it is, ARKK. The opposite, just to let you know, if you ever thought of shorting ARK, is SARK. SARK. This is, you can look at this and you can have the opposite. This is, if you look at the charts, they're exactly opposite. Been rolling down recently as things have been coming back for ARKK, right? We saw that. But that is an instrument I want to share with you. If you want to look at that, this W, again, Wayfair, the idea that all the crap stocks are starting to come back. And I say that seriously. However, look at this good base. We can connect a few different levels of interest there using the algorithm that we have, right? The altimeter, which is based on market profile. It shows us lines in the sand where people are placing their bets. It tells us where there is money that is being put on the line and where is that the most concentrated. Well, there was a pretty good level right here, right at about 46, we'll call it, that they weren't letting it go. They were saying, you know what, we are going to support at that level. And you see a bunch of touches, one here, 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 and again here. You got one, like 5 different bases or 5 different valleys, if you will, or lows of support that held. Call it a quadruple bottom, maybe. And then it was off to the races. Again, all coincided with that move from July. And where are we now? Up a little bit today. Not much above till you get to about 70. Exact number. If we hover 75, 75 is the number here. I tried to get up there a couple of days ago. High about 72.5, 73. So, I mean, pretty good run, though, right? 46 up to 72 and from 727. We're only talking about 3 weeks here. It's pretty amazing. A stock that I've been talking about a lot. I've been talking to you about, I've been telling you about, I've been nudging you about for weeks and weeks and weeks and weeks. It was down in the $10 range when we started talking about this. Now, where does it go from here is a different story. This is a smallpox company, a company that has also some vaccine potential for the monkeypox. It's 3 or 4 companies that deal in monkeypox is one of them. This has done the best right now. Earnings were out a couple of days ago. Missed earnings, but it didn't matter because the opportunity is moving forward in this name. Hit an all-time high just yesterday, off a very significant baseline of $6 that it held forever. And then it broke. And once it finally got above this 13 level, it was off to the races. A lot of range, though. I mean, look at this range here from, you know, there was a paper out, I think it was on a Friday. And it said, hey, you know what? The monkeypox vaccines that are being used in these companies, and the company wasn't mentioned in it. and people freaked out. But look what happened here. Look at the opportunity. Where did it come to? Exactly the line. Look at this right here. It came exactly to our level of resistance, which is red, but that turns into support when you're above it. Our support line was exact. If you would have had a buy order in somewhere in this range, that would have been a beautiful thing because it popped right back up the next day. And then it went from there. You doubled 13 to 24, 90% up on that move. Coinbase Global, a lot of hot water, a lot of problems, a lot of issues. Of course, it is tracking the Bitcoin and other cryptocurrencies due to the way that it operates, obviously. One of the things that we did see was there was a lack of trading that went on for some time. And, they really laid off of this for a while. So that's important. Let's go to Sonos. Sonos dropped off a cliff. I want to look at this long term. Oh, God. Yeah, I never really understood why this was such a great company anyway. Speakers, a lot of them out there, but good stuff, way overpriced. And probably not going to be bought if you're in a recessionary time period where you're watching your money. So Sonos, a couple of peaks on the bottom line here. Really hard to call this. You had a nice short that was going on here, raised right back up into it. No loss, no gain. Some no loss, no gains. It's not see on the daily basis when you see this, you got in here, you got out here, you got in here, you got out here, got in here. I made a little money here, $5, $4, $2. Yeah, this is not a stock that I would trade. It's too. There was some good opportunity back when, but it's just too choppy and gappy. There's gaps. I see gaps all over the place here. Not something that I would trade. XLE, somebody's asking about that. Also on my chart, down a little bit today, trying to make a little bit of a run. This is important to recognize on XLA. This is XLE. This is the energy spider. So we got right up to resistance again yesterday, backing off. This range is really tough, but once you get above here, it's pretty much, not a lot. There's some consolidation here, but it's just thin. So, because there's no other lines, right? So, we look at if we do break above, which is bad for us from a gas standpoint, probably oil prices are going up. You could definitely move up again. And there's big moves inside of here into the 81 area that look interesting. Downside on this, you do have this range, right? From about 77. I would actually utilize 73. Below that, I would start getting a little nervous to the downside. Momentum coming back up here, which is good to know. Win. I think there's an interesting opportunity here. Got above the line on Win, holding support pretty well. Basically, even on the day today in the pre-market, dropped off pretty hard. This is all about China. If China's going to ever reopen, Macau will do very well, and this follows along what's going on there. There was obviously a move from 52 to 67, pretty remarkable right there. Big consolidation here at the 81 level. That's where your overhead is in a big way. First line you have to get through really, though, is probably right above here, right about the 71, which is far away from where we are, right? 67. Got to get above that 70. I'll even go 73. Once you get above 73, I'll move this line down here. Where was that? Right. Multiple lines that touch, we like to see as a level that we have to breach. A name that you may not have looked at, almost an all-time high yesterday, turned around to the downside, down about 1% today, off $1, is Celsius. They make the drinks, the refreshing drinks that are non-alcoholic that people seem to love. Okay. And again, multiple bottoms that we saw here in 2022 after big runs. Big runs, right? From about 22, about 100, dropped off a cliff, multiple bottoms, started to ride right back up again, entered into a partnership with Pepsi. So things are really good. Somebody asked me about AA. That's not it. There we go. Overhead resistance. Where are we? I would say at right in between those lines, somewhere right, cut them right in half, 56 and change, currently trading at 52, $4 upside, reversed off yesterday, back down again today. Question is, are we in inflationary, deflationary time? This will work well in an inflationary environment or in a time that prices are going up for commodities. If we are in a deflation and in a recessionary time period, well, that's a problem. All right, that's going to end it for today. Thank you so much for joining me. I'll see you again next week.